Hello, my name is Kacper Wikieł, and I'm usually doing this presentation to customers, and I'm quite new to doing such presentation for investors, but I will give you a try. So I will tell you about the problem. The problem is that we have people that have good access to banking, and they have access to very cheap credit line or credit card or cheap loans. And then we have people that have no other options than pawn shops or payday loans like Vonga or ASA. And between those two segments, there are 4 billion people without credit score. So it's like most of the general population of Earth doesn't have credit score already. So what is our solution? Why is that a problem? Because those people, for example, pawn shops, are not doing credit scoring at all. And it's, as Y Banking said, is unprofitable for banks to service people that have less than $100 that can drive less than $100 of revenue. So here lies Gatline. It's social peer-to-peer lending marketplace. And it's operating in an already large and growing segment of peer-to-peer lending. And peer-to-peer lending is generating about $500 million of revenue per year. And you see that most lenders are focusing on payday. You see this, or maybe SME lending, but customer segment is highly unserviced. There is very low quantity of players that are operating in customer segment. So here we are. We want to target the prime customers, the best borrowers with low default rate on the global scale, found by finding them using our credit scoring. And I would like to tell you what we've done already. With about $1,000, we built a platform that is servicing 160 in active credit lines, and it's driving to over $2,000 of monthly revenue. So we already have return on capital from initial investments for MVP. And we want to grow larger, at least 10 times or 100 times larger than that. So we want to build Uber for credit lines. You see that you can request a credit line and it will be on your account via mobile app. That's our vision. That's ultimate form of convenience for the customer lenders. And so there are a few things that we are planning to do. And for example, dedicated customer support, support for currency loans, and moving into mass market, because right now this platform already profitable is operated by 3 people, and we have 18% month-over-month growth, and we are just focusing on getting at least 15% of growth per month, each month, for over a year, and I think that we can continue doing that for at least 3 years. So, as we planned, in this presentation, I was estimating that we will get net profit in 4th quarter of 2017, but we get so much new investor recently that we already break even. So here's our team. We have strong people with over 7 years of experience, or very talented developers, and people with PhD in economics, and successful SaaS entrepreneurs, and people with operational experience in credit bureau. So And I would like to tell you one more thing about big data and smart data, because big data is mostly buzzword used to get money for projects that doesn't make sense. But if you are looking in the big data in different perspective, all it matter is getting different data. Data that you, so if you have data that others don't, you can use it better than just operating a much better algorithm on the same dataset. So our users are scoring daily, providing crowdsourced information. And this data is very high quality because it's working the same as we have thousands of people doing credit scoring for each customer daily. So that's how it works. You see there is a graph of connection between people. And we are doing credit scoring via using this data, how people connect, and to detect bad actors and to prevent fraud and defaulted loans. And we would like to raise one hand. Yeah.
Thank you. Good slide to finish, to engage with the conversation of the dragons.
Okay, so as I understand, it works like Lending Club.
Yes, it works like Lending Club, but with main difference. In Lending Club, people doesn't know each other, and they are anonymous. And in Getline, they have a very strong reputational network. So it's like you have a score, and your loan is not one-time event, but it's continuous. So it's like credit card, but funded by other people. It's not loan. So it's most different between.
So that's the only difference in concept and the advantage?
No. Difference is that Lending Club is using traditional scoring methods and is using real bank for performing loans. So in fact, he's another middleman in the process, and we are doing truly peer-to-peer lending using cryptocurrency. So we have almost very low operating costs and zero marginal cost for customers. So that's allowing us to scale without increasing costs for operations.
Yeah. And you want to start in Poland only, or?
We are not operating in Poland due to regulatory complications. We are operating in United Kingdom, and we are operating globally since day zero. So.
Yeah. Okay.
And so, do you have any questions?
Yes, I have questions. Okay, so you're basically doing Bitcoin lending, right?
Yeah.
Okay, so help me to understand this. So somebody's basically lending Bitcoin from one person on the planet to another person on the planet. And so what happens if the value of Bitcoin drops, or what happens if there's a default? I mean, how do you do collections?
Yeah, that's...
Did you go over there and fly somebody over there to break his knees? Or, I mean, are you taking this risk, or you're basically asking your clients to take the raw risk of either liquidity or volatility risk?
And Bitcoin lending is very different than fiat lending, because there is in lending there are two percentage. There is a fraud rate and default rate, and in the Bitcoin lending the fraud rate is much higher and the default rate is lower compared to the traditional fiat lending. So we have to plan to move out of Bitcoin to regular fiat money. And because we found out that our scoring capabilities are working very much, and we have plans to do collection marketplace, but doing such large-scale operation require funding. It's impossible to do collections and at this moment with no funding.
Okay, and how you manage the defaults? Because do you use the risk sharing between the founders of each credit line, or when the loan is defaulted, then the people that invested the money are lost? How do you manage this?
We have a 6.5 default rate, and that's comparable to the default rate in regular banking. but interest rate on the loans is much higher. And with proper diversified portfolio in many borrowers, you're pretty guaranteed to have positive returns by just sheer power of statistic. And Lending Club records, it's if you invest in more than 115 people, the expected return from investment is, in the worst case, is 0. That's their data. Thank you.
Thank you. Thank you very much.